Right. So today we'll talk about risk reporting and risk management. Now, what is risk reporting? We have discussed about what is risk. No? If something is happening contrary to what you are expecting or to your expectation, there's a deviation, right? So the possibility of that deviation, possibility of you going wrong in terms of sales, in terms of profit, in terms of turnover, okay, in terms of market share, if you're if something is happening beyond your expectation, that we call as risk, right? Okay, now what is that reporting? You need to report that risk, okay, to the concerned parties interested in this risk. Okay, so who are the people? There are board members, from board members to the employees, governments to the tax authorities, everybody who is having stake in your company or interested in your company's affairs or interested in knowing even the risk. Okay, so let's look into risk reporting. It is simply communicating the facts and figures through various statements and reports to the concerned person, for whose purpose you're collecting the data. Example, like the director, okay, board of directors, right? That's management, and the shareholders, the owners, right? So for these people, what is that you prepare? Director's report you prepare. You might have seen the director's report and the auditor's report in your in the annual reports of any company. Now these two reports are common for any annual report, in addition to the income statement and the balance sheet. Okay, the annual report comprises of these four important statements. What are these four statements? Income statement, balance sheet, director's report, auditor's report. They're all the risk reporting. Okay, they're simply compliance reports, right? So the efficient risk reporting process is the foundation for timely communication of risk across the company or organization. So what is the objective of risk reporting? It may be statutory compliance, or it may be to provide the report of your activities relating to your department, activities relating to your plant, activities relating to the entire organization. Okay, so whatever is the unit under consideration, the activities of that unit, maybe a department, maybe a firm, okay, maybe a plant, whatever is the unit under consideration, the activities of that unit are supposed to be providing the record of their activities. Now, it is also helpful in planning and control. Planning, already you're all management graduates about to get graduated. What is planning? Planning is seeing before doing, okay, and controlling, cross-checking the what you have planned with actual performance. That's what controlling. So for these two things, you need to check the reports. What reports? Risk reports. And to ensure continuity in the policies and the programs of the firm, whether we are in consonance with the policies or not, we have to constantly cross-check with the reports, and to provide a quick review and to facilitate timely communication. Okay, now all these things we may put into two important objectives, that is to fulfill the statutory requirements, okay, and to fulfill the requirements of the other stakeholders, okay, the owners, the board of directors, and the employees also at times, right? So risk reporting we will broadly divide into two: the internal reporting, the external reporting. Now at corporate level, you have internal reporting. At business unit level, it may be one. Let's say if you take Reliance has so many verticals, right? Each vertical is a business unit. They are into digital products, they are into the vegetable products, okay, they are into communication, right? There are various business units, there are various verticals, right? So at each business unit it may be, right? Sometimes it may be at desk level. So the desk level, the business unit level, the corporate level at large, there are, internal reporting systems. Now, other than, this is one category. Other than this, if you look into external reporting, you have regulatory norms. The government may require you to follow certain norms, right? At desk level, at business, the government may, seek the information of your activities, okay, on a specific, area, or, pertaining to a specific area or pertaining to a specific activity. Government may seek the information, right? Now, whether the government asks or not, whether somebody asks or not, we will disclose voluntarily about our policies, about our activities, okay, to all these stakeholders who are interested in our organizations. It may be employees, it may be shareholders. Now, I always believe an organization's success is on three pillars, very often four pillars, but I believe that there are three important, pillars. One pole is the employees. Another pole is, the customers. Another pole is your customers. Okay. Another pole is, shareholders. Without shareholders, there is no business. Without capital that is invested by the shareholders, there is no existence of business. And similarly, right, without the employees who make use of that money and produce goods, there is no business. And similarly, if those products which are produced by the employees making use of the money of the owners, if there is nobody to purchase those goods, then what is the purpose of business, right? It is just a vain activity. So therefore, the business success depends on three important pillars. I strongly believe this. The shareholders' interest should be taken care of properly. The employees' interest should be taken care of properly. The customers' concerns also to be addressed properly, right? So with voluntary disclosure, your objective is to ventilate your information, okay, to disclose your information to these important three stakeholders. I strongly believe, right? Let us come to the levels of risk reporting, right? If you look at the corporate level, okay, corporate office, the registered office level, it is a firm-wide coverage, right? What is the focus of this reporting? What is that? The corporate level risk reporting, it is all focusing on the senior managers, right? On the risk concentration between business units and stress testing, and also at value at risk, right? Value at risk is, this we are, right? We discuss it in some other time, or you message me, what is this? Okay, I'll send you some information on this value at risk, right? So this is the focus when you are thinking or talking about risk reporting at corporate level. Now let's come to the business unit level. If you come at business unit level, right, this is across trading, coverage is across trading, and these business managers monitor risky outliners, large exposures, and yield curve positions, right? So this, this is more of operational level, okay, more of operational level. The previous one is policy level. The business unit level is operational level. It is more, it is simply having a surveillance of the departmental activities. And coming now to the desk level, this is across the accounts. The traders require detailed risk summaries, like the hedging, right? The risk analysis, right? Marginal risk analysis. What is that? Additional risk analysis. Okay, hedging strategies, right? This is at low level, right? Now look at this. here we talk about, in a different sectors. You may talk about at stock market level, stock market area. You may talk in hospital administration area. You may talk about educational institutions. Like, look at this. If this is easy for me to convince you and make you understand at education level. At education level, constantly our departmental, this is a program, MBA Technology Management day and MBA Technology Management evening also, right? And there are general MBAs day and evening. For each area, like MBA Technology Management, MBA General Management, right? For each area, there's a coordinator, right? You can say this is at a lower level, who monitors what's the coverage of the syllabus and how many more sessions are required to cover the syllabus, right? And how many assignments are given and how many more assignments are to be taken and what is the performance of the students. This is at a low level. Now, all these departments, commerce department, technology management, general management, all the departments of this college of commerce and business management, consolidated and at a higher level, that's at principal's desk. Okay, that's business unit. A university has a business unit at college level, right? And the university's performance at large, that's corporate level. The vice chancellor, deals here. You're reporting, all the principals will be reporting, all the deans, all the heads of the departments, okay, together report from their respective colleges, reporting to the vice chancellor. All we teachers, the professors, we will be reporting to maybe Vijayasagar sir, okay, and under sir, like sir, there are so many other coordinators. All these coordinators report to the maybe the head of the department. The departmental heads will report to the principal, and the principal will report to the vice chancellor. This is how the hierarchy. I'm just telling you one example. Education, you can take any corporate sector, hospital administration also you can take, and you can just go on the levels, at various levels, how the risk is, how the risk reports are provided, the activities report is provided. Okay, now I'll just go through, I'll just come across many more issues maybe in the short session. Let's look into the demerits or the limitations, the shortcomings of risk reporting, right? There are, the end value of this risk reporting is to maximization of value of the shareholder, maximizing shareholders' wealth, right? And is that being fulfilled? And object of reporting might be, it may be changing from time to time because of the change in the political scenario, okay, change in the environmental scenario, social obligations, change in the changes in the preferences in the social circles. So your reporting may be influenced by these factors in one word, I would like to say, right? So it is good that you take measurements to avoid the catastrophes. But risk management or risk reporting it's a post-mortem activity. What is that? Once the event is taking place, the event is reported. The event is reported. Okay, for example, instead of there are some miscreants who have they have destroyed the idols in the state of Andhra Pradesh. The risk reporting, seeking the report of who has done this, is a post-mortem activity. But before that only, if there are cameras installed, and those miscreants would have been caught on the spot. So yeah, risk reporting is very often, it's a post-mortem activity, and usually it's a technical activity in nature. Now let's come to the types of risk reports. One is operational reports. What's the purpose of this operational report, right? Now, number one is, it tries to measure the performance. How do you measure that? How do you do that? There are standards set, okay? And where do you set these standards? At the time of planning, you have some benchmarks, right? And with those benchmarks, you start your production or you start your activity, business activity. If your activity is not reaching the standard that is set, then you try to cross check what's wrong with you, right? So that's what, measuring the actual performance against the standards, right? Standards. And for this, you have responsibility centers and responsibility reports. And this is what I think budgetary control you might have. If yours is finance specialization, you might have covered these responsibility centers, responsibility accounting, standard costing and budgetary control in your maybe managerial accounting, right? Uh, I think so. The next thing is the information reports scope is this is to do with checking the checking the trend, right? Operational reports is purpose is to check the trend. What is the trend? What's the trend for our product, whether it is favorable or unfavorable? Just with one decision of WhatsApp, look at this. So many millions of people or users are exiting from that platform, right? What's the trend? It is an exiting trend, right? So this is an information report. Then sometimes you may take some ventures, right? And there may be a specific venture, and what is the outcome of that venture, right? For that purpose also, you make operational report. Operational report is to check how far we have achieved the standards, and it is to check the trends, and it is to check the outcome of the ventures. The second one is financial reports. Financial position of a firm on specific date helps in tracking cash flows. Okay, and it is also useful both for external and internal stakeholders, and it is also presenting the financial position of the company. Right now, financial reports, you can see cash flows, right? What's that you do there? You take the balance sheet of previous year and balance sheet of this year, income statement of previous year, income statement of this year, and you try to check what's the actual cash flow, right? There's increase in the profitability trend as in the previous slide, but what exactly is the cash flow amount, right? You want to know. And for that purpose, you have to prepare this statement, cash flow statement. Okay, and basically you prepare a statement that's called balance sheet, a position statement, to just tell the stakeholders, what's the position of your company, position of liabilities, position of assets, right? To both internal stakeholders like employees and shareholders, the external stakeholders like governments, tax authorities, and as well as your customers sometimes. Routine reports, these are all operational. It is routine reports. Monthly reports. Okay, and reports how much of bad debts for this month, and what's the credit collected, credit amount. You sell goods on credit, right? What's the collection on the debtors, right? And what's the sales turnover? It's a regular update, a regular update you're collecting from your staff, right? And this is collected at different levels, departmental level, firm level, and at large the organizational level. Do you understand what's the total amount of bad debts? Let's say if you take Reliance, what's the bad debts for digital? What's the bad debt for vegetables? What's the bad debt for communication? We'll just take these three, right? Let's say if the company has only these three areas, what's the total amount of bad debt for the company at firm level, right? Okay, and what's the credit collected, debtors collection, and what's the sales volume, the turnover of the company, as a whole, okay, as a vertical, as a store, right, at different levels and different time, for this month, for this quarter, for this year. This is what we hear frequently. Now, special reports to look in, yeah, uh, special reports. These special reports are mandatory. They uh, whenever there is some, uh, you know, whenever there's a specific need arises. Let's say you want to take up a new project, and before taking up the new project, you may have to check your existing capability. What is your capability before, I keep hearing even now, some of the historical stories. What the kings, before venturing into a war, what they do, they number the army, right? Even our Indian government, before planning for a war with China, how many tanks do we have, how many fighter jets do we have, and how many pilots we have, okay, how many tanks we have. So it is assessing yourself, right? Now the prime minister simply might have asked for a report. Rajnath ji, please submit me what is our capacity, military capability, right? Then, he takes a day or a week or a month to produce a report, right? This is a special report. It's not a routine report. Okay. Next, investigative reports. Investigative reports. All the SIT reports are investigative reports. And likewise, if something happens in the company, okay, let's say this, I have been telling you, right, about subprime crisis. When subprime crisis happened, what might have went wrong? What might have gone wrong with this company, right? And Punjab National Bank, a huge amount of bad debt, or NPA. What is this? What might have caused the ruthless sanctioning of loans, right? So this is the cause. Before you come to the conclusion, you go to the, assessment of the situation in the field. Then you come out with a report. That's the outcome, right? Assessing the cause and remedy for what's the remedy. You bring those fellows from abroad and try to confiscate their properties and attach them to the government. Identify the loopholes in the system, before advancing, before you pinpoint those fellows who have borrowed money. Okay, you try to make a foolproof system in your own banking system, right? So this is what identifying the loopholes in the system, and this will result in actionable outcome. Now the sixth one is budget proposal reports, and this assess the impact of problem, right? Then it is, yeah, budgetary control. It, right? At every level, budget proposals are sought by the company. Okay, let's say in my company, what we do is, in the beginning of the academic year, right, we have four verticals, right? We have international schools, we have junior colleges, we have UG colleges, okay, university colleges and junior colleges, right? And the top, our CEO sends the communication to send the budget for the coming year. Then it send, he sends to all the heads, the head of the principal, head of the schools, and head of the junior colleges, heads of the junior colleges, heads of the university colleges. The heads of the university colleges, they will in turn send us the communication, okay, seeking the reports, the reports, what's this budgetary requirements. Send your budget for the academic year so and so, and we prepare, this is what we need, this is what we need, this is what we need, we list out and submit. The principal at our level collects from all of us. Now let's say when it comes to the head shares it with all the professors. The professors will indicate their their requirement and the amount that is to be committed on those requirements. Let's say I need 2 guest lectures for my course. I have 2 courses, 2 guest lectures, each guest lecture costs, let's say 4,000. and 2 guest lectures 8,000, the transportation 2,000, 10,000, right? And 4 I need, right? 4 means 20,000. Okay, so for 20,000 is my budget, right? 20,000 is my budget. This is what is my financial commitment, right? I will submit to the head. And likewise, every teacher submits their requirement and the cost involved. And all the heads like that collect the information and submit to the principal. Principal consolidates it. And, and likewise, all principals consolidate these amounts and submit to the CEO. And this is how, okay, budgetary proposals are prepared. And this is one of the risk reporting, okay? And this is, better than the postmortem report, right? Risk management. Yeah, risk management. I told you that, if it is happening beyond your expectation, that is risk. The probability of going wrong, right? This is the opinion of the Basel Committee. Basel Committee, right? Basel Committee on Banking Reforms. Basel norms 1, 2. I started teaching when Basel Committee, advisory 1 came, then advisory 2 came, advisory 3. It goes on like that, right? So every 3 or 4 years, they, or 5 years at times, they go on giving, norms to fix the problems or the fraud possibilities in the system, right? Okay, so an expression of the danger that the effective future outcome will deviate from the expected in a negative way. Then, there's a possibility of expected negative outcome. The condition, this is what John Giger says, and the condition in which there's a possibility of an adverse deviation from a desired outcome. This is another definition. You can write one definition. If you can write 3 definitions, that's just very excellent. But if you can write one, that's at least one, that's enough. When it is definition, you have to write as it is. And you say, sir, I don't want this definition or that definition. I will write my own definition, but let it be a proper definition. When you're writing, let it be a very formal. Types of risk. You have credit risk, interest rate risk, liquidity risk, currency risk, insurable, okay, non-insurable risk. All right. I'll talk about these risks more. Credit, interest rate, liquidity. Can you please remind me how much more time we have to go with? Yeah, I think another 9 minutes. We'll quickly wind up. Right, credit risk. This is called default risk. Default risk. What is this default risk? The possibility that your customers fail to fulfill the contractual obligations. This is a credit risk. Okay, loss arising, the possibility, the probable loss arising out of this default is credit risk. Interest rate risk, due to fluctuations in the interest rates in the markets, okay, you may suffer loss. The possibility or the probability of suffering loss due to interest rate fluctuations is interest rate risk. And likewise, liquidity risk. It is the possibility that you may not be available with the, cash to meet your current obligations. You have to buy the material, you don't have money. And you have to buy the material, you don't have money, right? That's liquidity risk, liquidity crunch. And currency risk, just like interest rate risk, currency risk is, it's just similar. Due to changes in the currency rates, foreign exchange risk or currency risk, it is one and the same. Due to changes in the exchange rates, you may suffer some loss, and the loss arising out of such exchange rate fluctuations is currency risk. So these are all financial risks. Okay, right. Now, when you look at these 4 types of insurance, 4 types of risk, they are insurables. They are insurable. There are certain risks which you cannot insure. What are they? Yeah, if it is fraud or if mispricing, all right, breach of investment rules, these are all non-financial risks. They are all happening out of folly by any of the players in the matter, right? You cannot ensure that, right? So static risks, losses that occur despite no changes in the economic factors, and the dynamic, any change in the market, any change in the economy may cause some change in your profit or revenue. Fundamental risks, losses that are impersonal, okay, in origin, and caused by natural and economic, social, and political phenomena, whereas particular risks are losses due to specific individual event, okay, felt by a single person, right? Pure risk and speculative risk, right? Situations where there is a chance of either loss or no loss, right? When it is speculative risk, where the possibility of either a financial loss or a financial gain exists in purchase of expectation of some profits with an anticipation of rise in the prices, right? So risk management is to avoid, yeah, I think we will stop here. I'll share the PPT, right? I'll share the PPT. Now I want you to quickly just speak about the assignment. What shall we do? I'll share the syllabus with you. Yeah. Will you please speak up?
Yes, sir.
What kind of assignment? We'll fix it so that you can complete in just 2 days. I'm sharing the one second. Yeah, you speak out what assignment, it should be something workable, all right? It should be workable. I just give something and you don't submit, that doesn't serve the purpose. All right. So please do something so that I can add up syllabus. Right, sir. Speak out, please.
Can we have numericals?
Anything you want. For me, anything is okay. Okay. For me, anything is okay, but it's your convenience. This is your syllabus. This is your syllabus. Suggest something, then I will add on to that. I will suggest my own opinion. Right? This is your syllabus. Yeah, we have just 4 minutes to complete. At any time, it may be closing. And even if it is closed, the session is closed now. You can keep WhatsApping in the group, WhatsApp in the group, messaging in the WhatsApp, right? In the group.
Yes, sir.
Yeah. Right. What can we take up?
So I feel when we take up numericals, we can complete them in less time.
Is it the opinion of all?
No, my opinion.
Yeah. No. That's what
Yes, sir.
I'm asking others. I'm asking others. Yes, ma. Others, please speak out. Okay.
Sir, any important concept?
Yeah. Any important